Hello and welcome to episode 49 of the Wealth Amplifier podcast. Hello, Aaron.
Hello. Hello, Matthew.
Oh, thank you, Matthew. We got to settle down, Mom. Hello, Patrick.
How we doing?
And we're closing in on episode 50, guys. I think we need some sort of celebration for 50. I don't know what we should do here.
Yeah.
Just finished episode 48, my interview with my father. Anybody that hasn't checked it out, gotten good feedback. So go have a listen.
Maybe it's always a favorite. We should just have Sam come back for 50 because he seems to be one of our most popular podcasters.
We can do that. We can do that. I think he has more thoughts. I'll leave it there so we can get him back on there.
Yeah, no shortage of thoughts.
No, we are a thought-heavy firm. Speaking of which, lots going on in the general markets right now. One topic that I know is front of mind for me. You guys followed this situational awareness story?
I'm aware of it.
Situationally. So just to recap for the listeners or viewers, believe it or not, there was a hedge fund that was actually named Situational Awareness. And I don't want to do the classic Wall Street thing where something goes wrong and everybody dunks on the guy. Like he's done a lot right too. I just can't believe he named his fund Situational Awareness. But anyway, this was a guy, I think Leopold, and I can't pronounce his last name. I forget what it was. 24 years old, launched a hedge fund, big time backing from big time, especially Silicon Valley people. And this guy basically wrote a lot of papers about what was going to happen, particularly around AI, that gained notice amongst pretty influential people. And his performance was fantastic. A big investor in Anthropic, which he still has. And then his public market book turned against him just in a matter of days, because I think he had 4 or 5 times leverage on the portfolio. And when some of the AI-related stocks started selling off, he couldn't hold it together anymore, and he essentially had to sell at a fire sale price his whole public book to Ken Griffin from Citadel. So the fund, as I understand it, still in business, still has a big position in Anthropic, but I think declined something like 67% in the month of July.
Subsequent to that, I think several days later, I just pulled up the article, then he just invested $400 million in a private chip maker. So reading all the different articles, people are still lined up to invest with them. So just a very interesting situation here.
It's also, yeah, I mean, it's I think it highlights a few different themes that I think are common in today's markets, in that there seems to be a trend and an appetite from investors for more like private access, like these the country club style investments. So if you can get into these ring fenced exclusive funds to get access to things that you wouldn't otherwise have access to, people want that. And I think in his case, he had this tie to Anthropic, right? So like there's Anthropic shares in the fund. And then also the fact that, and I'll steal this from some other podcasters I've been listening to, like there's really no such thing as like modern day public market managers who do great things. Like there used to be a contingent for many decades that we could have Sam Liebman probably speak to, that had mutual funds that like were really great and they beat the market consistently, the Peter Lynch's of the world. They just don't really exist anymore. And call it, whether it's the ETF effect or the rise of passive investing or index investing, it just seems like if you try to do too much on the public side, like you just get yourself into major trouble. That's at least on the equity side of the fence often. I don't know how you guys feel about that.
Yeah, I think a couple things. One, even the public side of his investing was working quite well, but don't put 4 or 5 times leverage on anything. It's just and again, I've seen some version of this quote that the best hedge fund managers are ones that have had one blow up. like that they all need to get this out of their system. So maybe he'll go on to have a fantastic run. He's had a fantastic run other than one just terrible month, but leverage can be a killer. What's the line? The market can stay wrong longer than you can stay solvent. And there he is. As far as your point, and I think I heard the same thing either on Compound and Friend or Animal Spirits, one of the Ritholtz podcasts, about the dearth of really good public managers. I think it's kind of a weird thing that we've gotten into. There are a lot of really good publicly managed strategies that look a lot like the index, but consistently over time do a little bit better. I'm not saying I shouldn't say there are a lot. There are some. But as an industry, we sort of dunk on those as closet indexers. And we really want the people that take the swing for the fences with high active share. And when you have high active share and you make these big bets, especially if you make them with leverage, you're a hero for a couple months and then not so much. And I don't think that is sustainable. I don't think the markets are too efficient for, let's say, sustained geniuses, if you will.
Yeah. And that's
it's also the overconfidence. I've talked about this 10 times in our 49 podcasts, but when you're overconfident, you turn a blind eye to too many other factors. Like, I'm always a bull, I'm always a bear, and this is what I believe. I'm going to buy this stock, and I'm just going to block everything else out. I think you really run yourself into trouble. So you want to have conviction, which is not. It's almost like you don't want too much conviction. Like, my conviction is having no conviction. And my conviction, the reason is I'm not going to say the stock market is going up, because you can't know what the future holds. So I think most of us here at Amplius like to take a balanced approach. It could go up. I think it's going to go up, but I need to balance the risk and reward here. And we want to keep our allocation in line, because when you lean too much on one end of the seesaw, yeah, obviously, as Leopold did, you can really fall off.
So we should have a fund and call it persistent humility instead of situational awareness. And it'll be boring, but it should go pretty.
Yeah, I don't think that I have no conviction line is going to win us a whole lot of prospective clients, but maybe they're going to win us the prospective clients that have sound minds like we do. Like, we're not the hot new thing that's selling this one product that somebody's going to jump into and it's going to blow up. We've mentioned it before as well. Like, we're the second or third advisor that people end up with. They go through the one that had this hot new strategy and that doesn't work. They go to the second one, that doesn't work. And then they come to us and say, okay, let's do this right. Like, you've done this before. Let's have a measured approach. And when people get to us in the first time, I think they're lucky. And we'll prove it to them over time. But yeah, if you get to us on the first shot without having to have a blow up, that's a major win.
Yeah. I think what you guys just mentioned too, of like having the overconfidence, which often stems from being the smartest person in the room. We hear a lot about them, that this hedge fund manager in general was sort of touted as one of those, and is, right. He's obviously a very bright individual. That, I think, blinds you from what does give you success in public markets, which is like a bit of a monk mode approach. And I don't even mean that just from like a disciplined and a patience standpoint, but like that monk approach of like what you just said, Aaron. Like, I'm just going to allow things to come as they are, right? And like, that's the approach you have to have with public markets sometimes, because you literally can't control them. As smart as you think you are, and as much as you pour into a company's balance sheet and financial statements and cash flows and market positioning and management and all the things that give you conviction around why you're making an investment, can turn out to be wrong. And that takes an enormous degree of humility and, I think, monk mode type energy. So yeah, I think we could probably brand around that. We could probably come up with an asset management firm around monk principles that, to your point, Aaron, people would associate with.
I wonder, and I assume Leopold was in the Bay Area somewhere in Silicon Valley, because that seems to be in the world he traveled in. By the way, did you see that his fund blew up during his wedding?
Yeah, I did see that.
And his wife, I think, is, what's his name, Dario's like chief of staff or something, or assistant at Anthropic. So weird world they're living. But I wonder on that sort of the Warren Buffett thing that he always said he was happy to be in Omaha, because if his company were in Manhattan, he would just get too many ideas, too much activity, and he needed to be a little detached. And I wonder if Silicon Valley is sort of the modern version of Buffett's Manhattan. and it's just like too in the throes of things, and maybe you need a little detachment from the community out there. Speaking of that community, there's another stock that went public recently. How's SpaceX doing? Aaron, you want to give us the update?
Ho hum, right? IPO price was 135 as of this exact moment on Tuesday, August 11th. It is at 136. Now, ignore the fact that it went up to 220 and down to 108 in between over the last month and a half, which for stockholders, whether you were an employee, you were just an investor, that is a lot of anxiety over the last 6 weeks or whatever it's been. Markets got it wrong a couple times here. Talk about conviction again. When consensus is this one thing is going to happen, it doesn't ever seem to go that way. So we're sort of 0 for 2 or 2 for 2, depending on your perspective. The one was the NASDAQ is going to bring it into their index inclusion, and that means there's going to be all this forced buying, and the stock's going to shoot higher. What happened on that day? It went down 6%. Right? Oh, there's one. Number two, last Thursday, the first time that employees and insiders can start to sell, we're going to have this major cliff. It's going to go down. Everyone's going to be getting out because we're flooding the market with shares. What happened? It went from, I think it was 108. Again, that was 4 business days ago. Again, it's at 136. So 0 for 2 there. So I think that's that conviction again. Like, your opinion does not matter on what you think is going to happen. And if everyone has the same opinion, clearly the opposite could happen. So some interesting movements there in the stock over the last 6 weeks.
Very volatile, which has made the options market interesting, which is also good for us.
Totally. There's some of these trades, and look, we are far from options experts. That's why, in general, when we get involved with option strategies, we hire professionals that hopefully are experts. But man, some of the premiums, because of the volatility, are pretty wild on SpaceX, suggesting, at least in the options market, I suppose, that volatility may continue. Aaron, you've been a lot more on the front lines talking to a lot of our clients that either worked at SpaceX or still do. What's the general mindset around the stock move and sort of the behavioral finance side of these people that now have spectacular wealth? How have they been handling it?
Well, a lot of it goes to the anchoring concept. When you see a price of 175, 200, and it goes right back to 130, it was, I can't sell at 130. It was just at 170. And that 170, you have to block out that ever happened. So I think most people would have been a happy seller at 150, 160, 170. Now that it went to 108 or 105, whatever it was a couple of days ago, I think people wanted to sell less. And look, rightly so, maybe. They're really optimistic on the company itself. I am as well. When you have a heavy concentration in one position, sometimes you have to rule out your conviction, and you just have to do what's right for your family and have a balanced approach, as we keep talking about, and maybe selling at what, in quote, could be an inopportune time. Inopportune in hindsight when the stock goes right up, but what if it was the right thing because the stock's now sitting at $50 and $60 a share? So I think people were still happy to sell. Maybe not as happy when if it was back at $200 a share, but just to provide some context for those that are not really so boots on the ground here with SpaceX and track where its movements. 6 months ago, the last time that insiders were able to sell was $84 a share. That was 6 months ago. That's one heck of a return over 6 months. And then January, go a year earlier than that, so January of 25. I believe the stock is up 400% since then. So everybody, in the public markets that said, ha, 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 it went up to 200 and now it's at 110 or 120 or 130, wherever it happens to be at the moment. The people that held the stock that is now up, 5,000% over the last how many years, they're really the winners, whether it's at 108 or 120 or 140 or whatever.
Yeah, it's good perspective. And I find when speaking to clients about not just SpaceX, but when they have a concentrated position, they work for a company, they receive it in equity compensation. I find reminding them that so much of their net worth is still tied up in this stock is still such a hard concept to understand. Like, for example, right now, as we're recording this, the insiders are capable of selling up to 20% of their total shares, right? Which means by default, 80% of what they own in SpaceX, they still can't do anything about. So it's like, if you had gone, even if you sold last week at 107, 110, from the last time they were able to sell 6 months ago, that's like a 30% return, right, Matt? You math guy. Give or take 30%, not bad. Compare that.
Sorry, I zoned out for a second. We're going with you. 30%, exactly.
Going 30%, roughly.
Roughly.
And for you to be able to
over 6 months, and just that's over 6 months. Yeah,
correct,
right.
Just over 6 months. And it's like, well, but like, I just feel like I'm going to have regret. It's like, well, even if you sell all 20% of what you're able to sell today, which most people haven't done, at least the ones that I've spoken to, you still have 80% of your holdings that if the stock goes back to 170, like you're going to be along for the ride with most of it still.
Right, you have a big apple tree that's producing apples, and you pick a couple apples, and no, I have less apples. But guess what? The apples can grow back, and you will have a full tree again. So,
and I do wonder if that mindset changes a little bit when more of the shares unlock. They like if someone that has 20% now feels like that's all they have because the other 80% they can't touch, they can't see. But you're absolutely right. My dad told me years ago they make market on close orders, limit orders. What they don't have are buy at bottom and sell at top orders. Like there is no way to know that. So you have to decide when it's enough for you. And which is as much art as science.
Well said.
Monk mode.
So Mr. Monk over there, talk about kids investing, in particular these new Trump accounts, which we haven't really spoken about much on the podcast.
Yeah. I'm glad you brought them up. So being that audience is a lot of clients, we record a few videos, probably too long, thanks to my rambling. For anyone to actually,
I thought they were good.
Oh, thanks. But yeah, good information on them. I think there's a good format for us to just kind of like think through them a little bit. I think that they're interesting in that they're a nice complement to what you could have invested for your kids in the past. Like everybody, for the most part, is familiar with a 529 college account. Fewer people are maybe familiar with that a UTMA account, which is just an investment account for minors, kind of just a brokerage account for minors that they take custody of as they get older. These Trump accounts, they're essentially, in as short a summary as possible, like they're IRAs for a kid. They follow IRA rules once they take ownership of the accounts, meaning the dollars go in and they grow in a tax-deferred basis, tax-deferred manner. And then you can take them out without penalty at age 59 and a half, like they follow the IRA rules. And so what I have found is there's been a lot of buzz around them, is that's just an important one to level set. Like, hey, if you're trying to save money, I said this in my video, for college, to gift your kids some like early adult investment style money, whether it's a first house, a car, seeding a business idea, really not going to be the best account necessarily out of the options you have to take advantage of. And when it comes down to looking at a family saving for their kids today, which is why I always come back to like why cash flow planning is important. It's like, what's your savings capacity? If mom and dad are saving their 401ks and then they're saving to a 529 and they're saving to some of their own maybe intermediate financial goals as well, how much more capacity do you have to save? If you've got another 5K per child that you could invest, go for the Trump account. But to me, it doesn't necessarily need to be like the highest priority. We can talk more about the legislation. I'd be curious your guys' thoughts around, the long-term effects of some of this stuff, because I think there's some cool stuff to think about there. But mechanically, that's how I'm thinking through the accounts these days right now.
I would also encourage, we try to be as politically neutral here on the show as much as possible. We've got clients all across the map. And every 4 years we talk about, when there's an election, don't let your political persuasions sway whether you are believers in the stock market or not. So history shows, studies show, it doesn't matter if it's a Republican or Democrat in office, the stock market's going to do just fine. So try to remove that emotion. So I always hold my breath every time I bring up to a client or a friend or a family member, hey, you should open a Trump account, and 50% of the time the arms go up in the air. Oh God. And I jokingly say, how do you feel about the political persuasions of Senator William Roth? And they say, what are you talking about? And I said, well, he invented the Roth IRA. Do you believe his policies one way or the other, agree with them. So I say, look, you got to put that aside. You take advantage of the Roth IRA because it's a powerful tax-free growth tool. Use the tools that you have at your disposal. I open them for my kids. Especially if you have a newborn and you're getting a free $1,000, why not? I think it's a great way. It's another way to save. So why not take advantage?
Fully agreed. I think it's my own opinion. I think they're pretty cleverly constructed accounts. But forget my own opinion. Why would you not take take a benefit solely because of your political leanings? It makes no sense. Fully agreed.
There's a lot of commentary on how powerful these can be, and it to be seen whether it'll play out this way or not. But we all know there's problems with Social Security in the future. It's a government-funded program. Well, you pay into Social Security, but we all know the problems with Social Security. Well, here's a way that maybe we can try to support the long-term financial health of individuals because they have government put the $1,000. Actually, I shouldn't even say a government putting $1,000. You have private individuals. Michael Dell, right? He put $6 billion into this pot of money that's going to go to newborns. So you can start getting money put into these accounts that can grow, that can buy your first house, that you can use in retirement, that you could save for yourself. Maybe that's the way that we don't have to rely on Social Security as much. So using these other avenues that smart people, I think, that are putting these out into the world, we should really let it play out and take advantage of them.
Yeah, I think there were two pieces, I think, on the overarching theme behind them that I think are really interesting. And the gentleman who spearheaded the legislation, Matt, what was his name?
Brad Gerstner, I think Gerstner, the big VC investor guy. I think it's Brad Gerstner.
I think you're right. Right.
Yeah.
He was the champion of a lot of this legislation. He put it in an interesting way and just pretty simple. Like, we all, for the most part, are familiar with the power of compounding. And the earlier you start investing, the better off your benefits are going to be. All the magic behind the compounding of your investments working for you. And really, in our country, for the most part, like, we cut off the first third of our lives from like taking advantage of a compounding investment. And right,
great point.
People don't start their 401ks until they're in their 20s, or especially now with the cost of college these days, people are getting an even later head start with having to pay back student loans and debt.
It's a combination of a third of your life and the earliest third of your life to have more time.
Exactly.
Right? If you cut off your 60s to 90s, all right. Well, at least I was investing when I was 20. Well, how about if you were investing when you were a month old?
Right. That's exactly right. And I think the qualitative, which is a bit more conjecture possibly, but I think there is some merit and some quality to it in that, kids, I think in general, having a stake in the game, right? And not to get political to what you were saying, Aaron, before, but like, we live in a capitalistic economy, and
for now
we do. For now we do. And you can, that's a whole separate discussion. You can talk through the pros and cons, et cetera. But I think if I were to maybe dumb it down, even like, most people's issues with capitalism is that they can't participate often in like the fruits of the upper half or whatever the case is. And if you can get money into the pockets of kids and have it invested in the U.S. stock market, that there is sort of a feeling that you're in the game. And I think that can be a really crucial educational development point for kids coming up in the future, or taking advantage of these accounts, and allow someone to like I'll give an example, not to sound like I'm rambling. I took like an econ stock market class in high school, and it was interesting, but like, I really didn't give a shit about it, frankly, because like, I had no stake in the game. I didn't have investments working for me. My parents had money in a 529 for me, but I didn't even know about it really. So like, I was like, whatever, this is cool. I'm just like checking a box. I would imagine if I took that class and I had awareness of this account where I was invested in the S&P 500, I might have actually applied the lessons a little bit more and understood them, and had a little bit more of a stake in what I was learning about. And I think that is a piece of our educational system that's flawed, like learning about investments, learning about how to take care of yourself from a personal financial basis. So get off my soapbox a little bit. I think that those are some possibly really great consequences for the future of America, possibly, and our youth.
Yeah, I just don't see a ton of downside to it. But maybe I've been surprised before. Maybe the downside to helping children save and invest will come up later, but seems like a good thing to me.
Yeah, agreed. All right. Well, yeah, go check out our other YouTube videos. Give us a subscribe on that channel over there. And
Yes.
you want to hear more about Trump accounts or any other way that you can invest for your kids, we've got some good content up on there right now. So go check it out.
And
how about a Hoagie review to get some more listeners?
I'm just going to say,
I was just going to tee it up. Take it away.
All right. So I always go in excited to a new Hoagie place. You never know. And I'm always searching out the good ones. I Google all the time. I keep lists. So Lenny's in Manayunk, Roxborough, might more formally be Roxborough, but outside Philly. Was pretty excited. Took my son there. Great looking menu. I think this is, we talk about the South Philly establishments that's been there forever, the real artisanal rolls and meats and cheeses, and then the suburb Hoagie places. I thought this really could be the South Philly because the seeded rolls, and
I love when he goes artisanal. Go ahead.
That's my favorite word in the review category. So I had high hopes, but you got to balance out the experience and the Hoagie and the whole thing all together. So great big menu, a lot of different Italians, and they say, oh, we also have some other Italian combinations that you can get that actually aren't listed there. I say, great, give me one of those. It sounded like a really one that was up my alley. They got all the right toppings, all the right seasonings, all the stuff. But then it's a ragtag bunch of people that are working there. I feel badly saying, like, they sort of just woke up. I didn't know who was making the sandwich and who was at the cash register. So I give the whole order to the one guy, and he seems to know what he was doing. And he takes that piece of paper and he goes back and he starts making the hoagies. And then another lady, she comes up and starts ringing me up, and he's halfway done with the hoagies already. And she's saying, well, which one did you have the tomato on? And which one did you have the oregano on? And the cheese was on which one? It's like, what's the difference? They're already made. Just put it in one category and bill me for it. Like, I mean, it's going back and forth. So that was just a weird experience there. But the essence of the hoagie, every place they put their little spin on it, and it's a specific type of cheese. It's a bread that they bake in house. This one chose that their thing is going to be, instead of the chopped lettuce that you get, shredded lettuce that you get on a hoagie typically, one giant piece of romaine dark leafy lettuce.
Interesting.
Very odd. So if you Google Lenny's, I don't get it why that would be.
Right. That is a really odd sandwich hill to die on. Like,
right, we're going to stand on that soapbox and you're going to eat one giant piece of lettuce with and not even the light colored one where you get the crunch. It was like, the dark one. So anyway, I think the hoagie was pretty good, in the 7 range, but the whole experience and the lettuce, gets like a 5. So I think you have to average it out there somewhere in, 6 hoagie, probably not going back. The people on the lettuce, that's what got me, pushed it down.
Yeah, that's a shame.
Sorry, Lenny's. Sorry.
I thought you were gonna I thought it was gonna be possibly one of those where it's like no frills, didn't seem like don't judge the book by its cover, and you end up getting the sandwich that's like absolutely incredible. But sometimes,
alas,
yeah,
here we are.
So in a city that has, or a region, let's say, that has a lot of great choices, how high a rating does a hoagie place need in your eyes to bring you back a second time?
It's got to be in the 8s, because if 7 you can get anywhere.
Right. Okay.
Mid 8s and up. Yeah, with as many places as we have.
So almost like the academic range. A 7's like a C. It's like, you pass, but it's not that exciting.
Correct. And B is fine. And B+. Got to get to B+ to be a repeat.
Got it. Okay. All right.
Have you done? I know they obviously specialize in the cheesesteak department, but have you done Angelo's?
I'm dying to go. I had one Angelo's cheesesteak that was reheated an hour later at my sister actually's house. I'm dying to go because apparently they have not only the best cheesesteak, but the best hoagie and the best pizza.
Yeah.
I've had the cheesesteak and the pizza. I've not had a hoagie there, but it's really good.
Yeah, I've had all 3. Their pizza's
and
great. I think they're the king of cheesesteaks in Philly. I'll die on that hill for sure. I think they're the best cheesesteak in Philly, and their hoagies are unbelievable as well. Their pizza I think is really good. Their pizza is really good. I don't know if I put it in a category of like the best pizza I've ever had or anything like that. But
Okay.
their cheesesteaks and hoagies, I'd be curious for your hoagie opinion on them.
All right, so it's either got to be episode number 50 or 100. So I got to get down there quickly.
We could get my dad over to Angelo's, and we could all meet
all
there
right.
and
I like
do
that.
a live Angelo's. That's an
And I'm
interesting
actually going down to South Philly on Sunday for dinner. The last time I was down there for dinner, I did a whole afternoon affair. Hoagies, and then maybe we'll do that again.
That could work. That could work. Yeah. Keep it on your.
Yeah. The problem is, a lot of these places are closed in South Philly. We went down to a Phillies game, something on a Monday. They're all closed. So all the big staples, because I guess they're also busy during the weekend. They take either Monday or Tuesday off. So make sure they're open.
Yeah, fair. All right.
I think the best pizza spot, Pat, is the one in your old neighborhood. Was that Badia?
Badia's good. Yeah. Badia's got it's good vibe too. Like go get dinner there kind of thing.
So any other recommendations? Anything you're reading, watching, listening to? Anything along those lines?
I just watched, I think I mentioned already, I've been on the House of the Dragon. Really has continued to be a great season. So for anybody who's like thinking about it, used to be a Game of Thrones fan, I'd say jump in because it's living up to some hype. And then staying in the category of fantasy, usually once a year I try to like cleanse my palate by reading some fiction because it's like nonfiction takes up a lot of what I read and it gets a little dull sometimes. So I started reading Dune. And it's awesome. It's really good. I've been really thoroughly enjoying it.
Have you seen the movies?
I have. Yeah. But I prefer, especially something like that where it's like it's its own institution. I like to read the literary work. So yeah, working through the first book and would highly recommend it. It's funny. I saw an author say this recently. There's some good fiction that can be decades old that reads like it's brand new. Like Dune fits that category. If it could have been a book that came out last week, it just reads so easily. It's would highly recommend.
I watched I Will Find You.
I saw that.
I have a couple comments about. Really good. It's from this guy Harlan Coben, who apparently has 100 books and 100 shows that are all great. So that was a Netflix show, really good. But another passion of mine is Seinfeld. We talked about this in the office, and my wife and I would watch this show, and every time the credits would come on, the title page, it would say, "I will find you." I would say, in a high pitched Jerry Seinfeld voice, "I will find you," because in one of the episodes where Kramer gets lost downtown, and I think he's at the nexus of the universe at First and First, and how can the same street intersect itself? He calls Jerry to help pick him up. And then Jerry says, "Don't leave anywhere, or don't leave. I will find you." And he says that and he runs out the door. That's all I could picture. And I said that to Matt. And then I said, I think that he actually took that Jerry from something else. Didn't you say it was from another show or movie?
I think it was Last of the Mohicans, Daniel Day-Lewis, which was probably a contemporary. It came out around the same time as Seinfeld. I think won an Oscar. I mean, I feel like everything he's in wins an Oscar, but I think that was his line originally.
So I like the show, and the title always gave me a chuckle every time we turn it on.
Well, I read a book recently, but I won't go into it much because I took some negative feedback from some political comments on the last podcast. So I'm going to stay away. The book I read, might offend some people. I'm going to stay away from that. But I am watching a TV show that apparently has been out there 5 seasons. I had no idea it existed. What was it called? It's one about space travel, like an alternate history show.
You just mentioned it. Oh, I wish I could get the title for you.
Crap. Well, we're live, so I can't look it up. I'm looking up here. Space show on Apple. This is great content for the listeners. It is For All Mankind. There it is. And I like it. It was weird because it's like basically what if the Soviets had landed on the moon first, and then what would have happened in history? And like by the second episode, like the Americans had made it there. So I was like, how are they going to get 5 seasons out of this? But now we're in season 2, and it's picking up. It's really good. It's really well done.
Nice.
Apple does a good job. There's a lot of really abstract sci-fi shows that are not always my thing, but the big hits I do tend to like from them. They don't have a ton of shows out there.
Yeah.
But when they do, they certainly put some money into them, it seems.
Have you guys tried Silo? Speaking of, I think that's Apple.
I've seen that on there, but I've not watched it. Is it good?
I watched the first 2 seasons. I really liked it. The third one just came out, and I've been a little slow to get back into it. Find that can be hard, like with the amount of shows that are just available to watch these days. Like, your off air time is important, unless you've really got some serious brand cachet. Like, 2 years go by between seasons, like, you might have lost me, you know?
Yeah.
I need to get back into it a little quicker.
Yeah. And there's a new season of Lioness out, which I enjoy.
Oh, nice. Yeah, I haven't checked that one out either.
But I think it's released like one episode a week. So you gotta
be patient about it.
All right. Well, stay tuned for information on episode 50. Check out our YouTube channel and be in touch. Thanks a lot.
All right. Good stuff.
Thanks, everyone.